Hello and welcome to the latest Astute Market Overview. Since our last overview, the US markets closed briefly for Thanksgiving and the Chancellor of the Exchequer revealed his autumn statement. Now the Black Friday sales are nearly over and December is within touching distance. Let's turn to the Eurozone first, with Eurozone Consumer Prices Index or CPI inflation coming in at 2.9% for October, a climb down from 10.6% in October 2022, with energy prices a large detractor. Turning to the price of oil. The cost of crude oil is a factor amongst others in the cost of petrol at the pump, albeit the price of crude oil is much more volatile. A petrol station close to where I live advertised their low petrol and diesel prices on Facebook and are usually 10 pence cheaper than competitors in the area. Consequently, there's often traffic on the main road on which it sits. Clearly, the high cost of oil and petrol last year was felt acutely by many of us. However, petrol and heating oils aren't the only area of inflation impacted by crude oil price increases. Given that oil is a key component in shipping and manufacturing of many goods, its cost feeds through to many of the goods and services that we consume. Brent crude oil prices are now well below their summer 2022 highs at around $82 per barrel of Brent crude oil this week. Whilst risks around high prices remain, the threat of energy prices dramatically increasing and stoking inflation is waning. Next up, the UK, where inflation continues to be reined in. The British Retail Consortium reported their shop price inflation measure came in at 4.3%, its lowest since June 2022, and a 0.9% fall from October. The Office for National Statistics, or ONS, released their measure of UK retail sales. Both unseasonably warm weather and wet weather have been blamed for a fall in retail sales volumes in September and October this year, with the warm weather suppressing autumnal clothing sales and the wet weather keeping footfall down. This resulted in a gloomy picture for the UK high street, as the latest data shows a fall in spending for October, in addition to a downgrade for September. And finally, over the period, the autumn statement was revealed by the Chancellor, Jeremy Hunt. We released an overview of the statement last week and have pulled together a document containing a detailed breakdown, which we will publish this week. The standout change in the statement was a cut to national insurance contributions. The employee national insurance cuts, with main rate of Class 1 contributions down from 12% to 10%, will boost household disposable income by £8.7 billion in the tax year 24-25. Given that a portion of this money back into our pockets is likely to be put towards savings and some spent on imported goods, then not all of this will be fed into the economy. Therefore, this cut is likely to add a small boost to demand, but hopefully not enough to put some of the wind back into inflation sales. And finally, the first transatlantic flight by a large passenger plane powered by sustainable aviation fuel completed its journey this week, successfully landing in New York after setting off from London on Tuesday. Coming up, OPEC Plus will meet, US jobs data and Eurozone retail sales will be released. We'll see you next time.